Hi, my name is Anil Desai. I am a Senior Vice President with Benchmark Mutual Fund. I am a Chartered Accountant by qualification and I've worked in mutual funds for over 15 years now. I'm here today to talk about gold as an investment and gold ETFs. World over, there is a lot of interest in investing in gold. There are some intrinsic properties that gold has which make it such a good investment in the long run. For the ordinary investor, therefore, it makes sense to hold a small portion of their assets in gold. Ideally, about 5 to 10% of the portfolio can be held in gold. I would suggest that the amount that is normally kept by investors in bank fixed deposits, one may look at parking some of that portion into gold. Usually people have been buying gold in physical format, that is jewelry or coins and bars. But now there is a better alternative for investing in gold. One can invest in gold through a gold ETF, that is exchange traded fund. What happens when one buys units of gold ETF? The person is actually buying physical gold because the fund itself invests all of its corpus in gold. Therefore, this is a simpler way for an investor to buy physical gold. Usually, 1 unit of a gold ETF represents 1 gram of gold. Our mutual funds are extremely well regulated, and therefore SEBI does a thorough audit of all the mutual funds to see that whatever are the scheme objectives are not deviated. If a gold ETF has a certain number of units, then exact quantity of gold is held. In India, the rules are more stringent than in the rest of the world. So, the gold that the mutual fund holds is to be held by an independent custodian, which is a bank. And this gold is held in the form of 1 kilogram numbered bars with a certificate from the refinery for the purity of the gold. So given this kind of regulation, the investors have a very good vehicle to invest in gold in a safe manner. There are several benefits of investing in an ETF. Compared to physical gold, there is no premium or cost that the investor has to pay. If the investor was to buy jewelry, there is a premium and making charges which would add up to almost 8 to 10%. If the investor was to buy bars or coins, again there is a premium to be paid. In case of gold ETF, there is no such cost involved. The gold is certified by the refinery to be 0.995 purity, which is the highest level of purity. It is very easy to buy and sell gold ETFs. You can just call your broker and place an order for a gold ETF, and the units will be transferred into your demat account. Whenever the units are to be sold, again a call can be made to the broker and the units will get sold and cash will be given on payout. The check will be given on payout. So it is far easier to buy and sell gold compared to buying physical gold. The taxation part also is far more liberal for gold ETFs. There is no sales tax etc. that is involved, which would be the case in case of physical gold. Secondly, if an investor holds gold ETF for 1 year, it becomes long-term capital gain, which is subjected to lower rate of tax. In case of physical gold, it becomes long-term asset only after 3 years, and therefore if the investor were to sell after completion of 1 year but before completion of 3 years, then in case of physical gold there is a higher tax that the investor pays. So in terms of costs and taxes, gold ETFs are far better for the investor. Gold ETF was first introduced in the country by Benchmark Mutual Fund, which is a fund that focuses on exchange traded funds. It is the pioneer and the largest in the exchange traded fund space. World over $60 billion is invested in gold ETFs. In India also, the benchmark fund itself has about 1950 crores of assets under management in gold. So therefore, Indian investor also is finding gold ETFs to be a convenient way of investing in gold.